Investors and traders, welcome to the channel Market Chart Pattern. Today is 25th of June 2023, and I hope everyone is having a fantastic weekend. In this video segment, we are going to take a look at the key US stock indices as we always do. This video is for educational purposes only and it is not a financial advice. New subscribers to the channel, thank you very much for subscribing, and the old returning subscribers, thank you for watching the content. For the new subscribers, just to give information, every week and especially at the weekend we do this video segment in which we go through the key US stock indices, and at times we also take a look at the bond markets, because at the end of the day all these financial markets are a big flow chart of cash. If one thing goes up, then money is always moving from another part or another financial asset and moving into something else. So we have to take into consideration each in the indices on its own, and also other markets such as the bond market, which also has an influence in terms of movement for these stocks at times. So guys, what we are looking at is the daily chart of the S&P 500 E-mini futures. The long-term subscribers will know that we had a target of 4,500 to even going up to around 4550 roughly speaking, and our target was met when the price came pretty much close to our target of 4500. So I believe it came down to the high was 4493 and 3/4, which is close enough in my opinion. There is a higher level of around 4537, or if we were to round it off, about 4550. However, after meeting our target, the market has been moving lower for quite a few days, and in fact on a weekly chart, I'm just going to move to the week here. The market had a down week, and you can see that we have had several weeks where all we get to see is a white candle, which is really good. And after quite a few weeks, 1, 2, 3, 4, 5 weeks, we get to see one candle which is black, selling pressure coming in. And what it means is that the price is actually consolidated and formed an inside bar. Okay, so just going back to the daily chart, if you haven't seen the video which we did and posted yesterday, where we were looking for an analog, I'm just gonna move to that analog here, where we compared the two markets, one of 2002 to 2003 and the current market of 2022 to 2023. Per this analog, we are looking at perhaps if a correction, if we are in a correction, we could expect perhaps a 5% a correction. Roughly speaking, that could take the S&P 500. Now we are looking at the SPX, and we are not looking at the ES, the E-mini futures, to about 4200 roughly speaking. Now, if this correction or the downward momentum continues, then what are the levels that we should watch? So here I'm trying to break it down into different scenarios by looking at how these corrections in the past in this ABCD leg higher have come about to be. So if we look at this little correction here, and we take this and we clone it, we get a level of about 4383 roughly speaking, where this correction in terms of the magnitude could lead us to. And in fact, this is what we have seen past week on Friday. The market closed, or in fact the low for the market was 4381 and 50. So in other words, that level has been met, which is in this CD leg. This is the decline which we had seen, and we have seen the market repeat just that. Now in this ABCD pattern formation, we also had another leg here which formed our BC swing. And if we copy that, clone that, and project it from the top here, assuming that this is the top, then what we have a target of around 43.35 roughly speaking, and we have a rising 20-day moving average, and it's possible that over the course of few trading days the moving average will also catch up to this around this level. So shorter term, this is what we are looking at. However, a 5% correction will take us a little bit lower, and if we were to do this 5% here, um, from the top, assuming this is the top, then a 5% would be roughly around 42.60, roughly speaking. I'm going to delete this for now, and 42.60. And if we were to draw a 38.2% Fibonacci retracement from the very bottom of this entire ABC swing, we get a level of 42.25. And if we just draw the retracement from this CD swing, then what we can see is a 38.2% Fibonacci retracement will come at 43.27, which is also where we have this BC swing in terms of its magnitude correction coming together, forming a region of confluence, two things coming together, and also the possibility of this 20-day moving average rising up to these levels. So that is a level to pay attention to. And of course we have the 61.8% Fibonacci retracement coming to 42.26, and just going back to this entire ABCD, and here we go. So what we see is we have the 61.8% Fibonacci retracement, and we have the 38.2% Fibonacci retracement, and also by looking on the left hand side we see some structural support coming as well. So this 42.26 is going to be a very important level to watch in terms of support, given the fact that these levels that we'll be watching, if they do not hold, then this is the key level of 42.26, which will also roughly be around a 5% mark that we just picked up from the analog that we are watching. So guys, I'm going to remove these so that the chart remains clear, and what I will do is I will mark this here 42.26 roughly. Okay, 42.25 and 75, that's the level that we are watching. I'm gonna remove this one, which was just a support line from the structure here. So this is the level that we are watching, and I'm also going to highlight it like this. I'm not going to annotate it any further with any text, trying to keep the chart more clean, but this is a level that we have to remember that where a possible correction could lead us to. And if this level is broken to the downside, then we need to pay a lot of attention, because it would mean that maybe this correction has a lot further to go, and we'll have to view the market structure, market patterns accordingly. But for now, these are the levels we are looking for. Just to reiterate, the first level of 43.83, that this has been met, so this is this much correction here. Then the BC swing projected comes around 43.3850, and then of course we have the confluence of 38.2% Fibonacci retracement of this entire ABCD, and 61.8% of the CD leg coming and around 42.26 roughly speaking, and that will be a key level to watch. So this is, guys, what we are watching in the market on the daily chart in the S&P 500 E-mini futures. Now let's take a look at the NQ. So this is the daily chart of Nasdaq 100 E-mini futures. This market also completed a key pattern formation right at the 78.6% Fibonacci retracement coming here, and then we have these several ABCD patterns completed. I'm not going to go through the details of those in this video because the video will be too long, but in the previous videos we have covered these, what these patterns are in terms of how we arrived at these patterns. Just while we are talking about it, we do have a slightly higher target of around 15576, which will be the 2.618 extension marked in this, excuse me, this will be the, yeah, we have this level as well, which is the 15,600 roughly, where we have a 2.618 Fibonacci retracement come in terms of an expansion. So here in terms of the correction, possible correction, what we have seen is that ever since from the 78.6% Fibonacci retracement, the, the the price has actually moved lower. It is consolidating here, and it is a fairly shallow correction, so to speak. The price from a momentum perspective remains strong as it is above the 20-day moving average, highlighting the blue moving average line, and also the gray line, which is the 200-day moving average. So, in terms of pullback, what to expect, we can expect the market to perhaps pull back to around this 20-day moving average, which is also this correction which took place in this ABCD formation here. In fact, an extended ABCD, and which will come around 14,850 roughly speaking. Further, we have this, which is this much correction which took place in this CD leg, which is the extended CD in this black ABCD, and also a in the orange one that comes to around 14,351. In fact, this one is an important one, and then we have another one here as well. But if 14,350 gets broken, then there is a more chance that perhaps the market is going to try and reach towards the support level coming from the structure here, which is also close to the 38.2% Fibonacci retracement of this entire move up. And while we are here, we can quickly do a retracement from here as well. Here we go. So this 38.2% Fibonacci retracement will also be the 50% retracement of this leg higher, and we could also have a several level of confluence come together perhaps, and this one is not going to be that accurate, but it's going to be very close to the 78.6% Fibonacci retracement. So I'm going to delete these to make the chart more clear. So here we go. This level of 13,633 is really important. The key is that for this zone here is pretty important from a support perspective. Here we go, and this is where the market perhaps could pull back. But one of the things about this index, Nasdaq, has been that it's been pretty strong index. It's been the one which has been rallying. It was hardest hit when the interest rates were really going higher in 2022, and now this is the one which has been leading, and mainly it's because of the stocks which are related to AI, i.e. the artificial intelligence stocks like Nvidia, Microsoft. They have done really well. Even Apple has done well, in fact very well, and of course Tesla, which we follow very closely. So all these stocks have made a contribution into this, and in the market these are known as the Magnificent Seven. Okay, now let's take a look at the Russell 2000. This is the small caps. It formed a nice ABCD formation, and after that the prices just collapsed. The price structure does not look very good at the moment. You can compare yourself by looking at the Qs, and also just comparing it with the ES, which we just looked at in the beginning of this video. And here it has broken below this 1852 level, which is one of the key levels that we were watching, and looks like it's going back into this range from which it had broken to the upside. Now it is being pulled back, and we have this rising trend line here. Maybe it's gonna go and touch that or come to the middle of this trading range. We'll have to wait and see. Let's take a look at the Dow Jones through the eyes of the future contract, E-mini Dow Jones futures. This is a daily chart. What we are looking at here is basically a sideways consolidation which is going on for a long time. The index is pretty strong actually. What we are looking at is basically a high level consolidation here, and it's just going on for a very long time. There are a number of reasons because of it, and of course it's gonna be the kind of stocks that the index has, and also it is a price weighted index, it's not a market cap weighted index, but it is also a very good index to follow. Also, there is a lot of historic data available for Dow Jones, but for in our current market, it is the Nasdaq which is dominating. So we have to look at Nasdaq, S&P. We also have to cover the small caps, and of course, we have to look at the Dow Jones. There's one more index which I'm not taking a look at in these videos, which is the NYA. It's not tradable; it's a New York Stock Exchange. Um, it contains a lot of stocks, including ADRs. ADRs are basically foreign companies, and their stocks are traded on New York Stock Exchange as depository receipts. And we but it covers foreign stocks as well, so it's also good to take a look at. So I think I will also begin to include that. And then we have the Wilshire 5000. That's too big of a universe of stocks, but I think at least on once in a quarter we should also begin to take a look at that, and I will begin to incorporate that in our videos, perhaps towards the end of the quarter, or even in the end of month videos, to get a bigger picture. And so apologies, the video is getting too long, but here what we are looking at is this is testing the upper range of this trading range, upper boundaries of it. Now it's pulling back. We were thinking that it's going to move in this ABCD formation higher, and in fact take these highs out, which might still be the case, but for right now it's pulling back. It could pull back right into this rising trend line here, which would in fact be nice, because then it can give us an ABCD formation higher, which will in fact come very close to what we are already looking at and highlighted in this red line. So guys, this is what we are watching in our analysis for the key indices for US stock market. And if you like our videos, how we look at the market using technical analysis, using Fibonacci retracements, expansions, and one-to-one projections, the ABCD as we like to call them, then please do subscribe to the channel. And if you found this video of educational value, then please do hit that like button. It just indicates to me that people find value in these videos, and it gives me a big thumbs up to keep on producing more videos for educational purposes for you guys. So thank you very much. Have a wonderful weekend, and I will be back again with another video next week. Take care, good luck, and good trading.